Well, greetings, everybody. It has been a long time since we've last met. I know I've been promising that we'd be discussing the markets and the book and other things for a few weeks now, and I apologize as time has just been flying by given a number of efforts going on at this end. But I have a few minutes today and thought I would spend the time catching up. We'll talk a little about a lot of things. We'll talk about the markets, we'll talk about trading, we'll talk about the upcoming book, and I guess that's a good place to start in terms of where things stand. It's been a very interesting experience for me, coming from a place where I have publicly blogged my thoughts on pretty much a real-time basis for various parts of the last 10 years. We look at various communication mechanisms like Twitter, which we use quite a bit now. Miller Don is the handle on that. And now we have a Facebook page for the book. And throughout all of these, one common theme has been the ability to communicate on a very timely basis. Well, as I've gone through the book publishing time frame, I'm learning in great detail how the publishing of a book differs in terms of the time frame required to get the material copyrighted and to get it out to the public. Whether it's a book or whether it's a movie, I have newfound respect for the process and can understand why things take as long as they do. And essentially, it takes about 6 months from when a manuscript is complete to go through the proofing and the copywriting and everything that needs to be done, go through all those processes until the point where the book is formally released. So we finished the manuscript toward the end of 2012. And it is due to be published in July of 2013. So right now it's in the copywriting stage, and I expect to be working with Wiley quite a bit over the next couple of months to finalize exactly what this looks like in terms of dotting the I's, crossing the T's, and all that. But essentially, the guts of the project is done. It's a matter of compiling it in a way that we ensure it's readable and all that kind of thing. And again, it's been a very interesting process. Again, the title of the book is Chronicles of a $1 Million Trader, and we've actually, after some going back and forth, we've actually agreed on a subtitle, of which I'll tell you, I went through about 50 of these, and it was very important to me to put the title in context, to put the cover in context with what this material was going to be about. As I've said before, this is a project where Wiley Press approached me, John Wiley Sons, and I originally said no and thought a lot about how to do this and whether to do it. It's kind of like going back to the Jelly program that we started a few years ago in terms of should we do this, should we not do this, and if we do this, how do we do it right? How do we send the right message? How do we send the correct message in terms of really getting at what the business is about, and killing the hype and just undertaking a very serious endeavor. And that's really how I've gone about it with the book. So anyway, back to the subtitle. It's going to be subtitled My Road, Valleys, and Peaks to Final Trading Victory. And one of the reasons I wanted to go with that one, or I settled on that one, was because it was very important how I ordered those words. And it may sound like a very little thing when you're grabbing the book and you're reading it, and you fly past the cover fairly quickly. But as truthful as the title is, in terms of the $2 million essentially that I earned in a fairly short period of time, and have hung on to and have continued to grow, it was very important to put that in context. So road, valleys, peaks. Certainly peaks, certainly valleys, and certainly a very long road. So, again, it may sound like not a whole lot to you, but it was very important to me right off the bat to put this in context and to get at what this book was about. It's about a very long career developmental process where there were numerous bumps, some tremendous valleys, an abyss that I talk about, and I have talked about in public in the past, but I really get into the details in the early part of the book. And I want to make that point fairly clear because a lot of you have come to me or have been made aware of me over the last couple of years, late 2000s, really from the 2005, I'd say, to 2012, 2013 current day. and you didn't know the days and the years beyond that or before that. So it was very important to me to lay that out, and again, to the extent that the title and the subtitle properly reflects the complete picture. That's what we're trying to do. I've also mentioned before that we're going to do something that I don't think has ever been done before in the trading publishing industry, and that is to provide a very detailed 10-year view on every single trading day. There's a graph that you'll actually see in the book that's going to show you both the day's result along with the accumulation of gains. It's kind of a double overlay chart over 10-year, I think it's a 10-year period or close to it. And we've been putting that together and using some painstaking detail to make sure that it's right when you're dealing with such a large volume of data, which thankfully I have documented from the day I started this business. It's a bit of a large task, and so we're working through that. So that's kind of where we're at in the process. In the meantime, I have had some discussions with various people in the industry, Lynn Ratchke, Dr. Brent Steenbarger, who many of you may know was a bit of the foundation, if you will, for the blog when this was launched in the 2008 timeframe. Again, the idea back then was to spend a certain period of time actually using a public blog as my trading journal, laying it all out there, the good, the bad, the difficult, the wonderful times, and in an effort to continue to promote transparency in this business, in an effort to really take Dr. Brett up on his some of his fine work in the psychology of trading, which I still consider to be one of the best out there in terms of trading books, and to take him up on some of his concepts and give it a go. And we did that, we were doing it in earnest probably for about a year, every single day, almost every single trade. And that's, of course, captured in the beginning, or in what we call the initial blog, the original blog, which there's a link to on the site. And so Brett and I have had some discussions recently, especially as this book has been going to press, in terms of seeing what he thinks about it and reminding him that he was the genesis for a lot of what transpired in the 2008 to 2010 timeframe at my end. And his response, he's actually received a copy of the manuscript. And his response was very favorable. He said it was a good read, and I want to use this as an opportunity to certainly thank Dr. Brett for all the work, all the contributions that he's made to this business. Many of you may recall he also had a very public journal where he was very active for a couple of years before he took a job with a private hedge fund, which has really prevented him from being able to talk very, very publicly. But it seems he's doing well. And certainly, if you're watching this, Brett, thank you again for the seeds that you planted several years ago, for your support over the years, for your thoughts on the manuscript as things stand right now. So, again, very, very much looking forward to putting something out that I think will last or will pass the test of time. It was important to me when I did this to make sure that it was something that could really be beneficial to traders. Really forever. As long as there are markets, as long as there's human emotion, as long as there are human beings, fallible human beings, trading financial instruments, and the concepts of fear and greed, this stuff should be timeless. Much like one of the Genesis, one of the books that preceded this, certainly Reminiscences of a Stock Operator, which essentially this is a modern day version of that. So again, I think things are going well in terms of timing. I think that you'll be very pleased with the content, and I guess the last way I would try to describe it, and it's very hard to describe because I really haven't seen anything like this, is it's going to be very unique. And I guess I just have to leave it at that. Let's talk a little bit too about the markets, about the jellyfish concept, which certainly I touch on a little bit in the book, but the important takeaway, when you go back to the Jelly Trader training program that we have and the videos and all of that, the crux of this whole idea is to realize that we need to be flexible creatures in terms of the market. We can't try to force fit one particular style, one particular trading method, if you will, into all kinds of markets. the concept and the reasoning behind the term jellyfish is basically jellyfish have to feed off of the current that they're thrown into. They have no power or strength on their own, and they've got to do what they can do with where they're at. And that's exactly what every trader should aspire to. One of the challenges with the turtles, for lack of a better example right now, is they have one way of doing it, and it works during certain times, and it doesn't work during other times. It works very well in trending markets, doesn't work so well in non-trending markets, and markets tend to chop more than they trend. You have other methods, other systems, black boxes that are taking one method and trying to force fit that into every type of a rhythm. And markets are going to flow. They're going to ebb and flow, fluctuate from one rhythm to another. Trend day, morning after trend, day after trend, next day. So day by day, month by month, year by year, we're in a period right now of somewhat reduced volatility. It's very important, as I've said in my postings lately, or in the little snippets that give the bias on the lower right-hand side of the margins here. It's very important to focus on those one or two PJO, prime jelly opportunities during the course of the day and maybe even during the course of the week. It doesn't change the concept at all. It doesn't change what a jelly should be doing in terms of effectively trading, but it changes the way that person should be trading, in that you've got to adapt. And so I've gotten a lot of mail lately on, reduced volatility, things aren't working. Well, things are still working. Things are still working very well. It's a matter of understanding what's happening and adapting to the situation. And so, that was the crux behind the concept of the jellyfish. When you go back and look through all the materials and all the videos that remain available, it gets to the crux of being flexible, of taking advantage of wholesale market inefficiencies, which you're always going to have, taking advantage of those, and profiting from the return to the norm, if you will, and that definition is going to somewhat vary in terms of the specifics based on what the market is doing from a general perspective. So, yes, we're seeing reduced volatility, although last week I thought was pretty darn good in terms of market finally pulling back on a longer term basis, providing just a screaming buy opportunity on Thursday afternoon. A couple of down days in an up market, and hopefully traders are doing very, very well. But anyway, just to put the jelly concept, has that changed? That notion will never change as long as we have markets. And whatever we call it, whether we want to call it adapting or whether we want to call it being flexible, whether we want to call it being a jellyfish or jelly trader, the idea, despite how you decide to call it, is that we should be flexible. And it's those traders that are going to do well in every single market. You're going to profit in every market every single year. And the only thing that's going to get in your way is yourself. And have I gotten in my own way at times? Absolutely. Far too many times. Is it something that we ever get rid of? No. Is it something that we become more aware of and manage? Yes. And I think the longer that you're in this business, the longer that you age, the more that you mature, the more that you gain that experience in the market. At the age of 52, I can say I know a hell of a lot more now than I did in my 30s, 40s, 50s in terms of the market, or 50s, 30s, and 40s. And do I know more today than I did a year ago? Absolutely. Would I like to have done have a do-over, a mulligan on the first 5 years of my career? Undoubtedly. But I think it's very important to talk through those periods, to talk through the trail in the hope that other people can have a shortened learning curve. Again, the upcoming book is going to do that in spades. So again, that's kind of just a quick update. We had a major blizzard here a couple of weeks ago. I did a very short post. It was crazy. It was a storm of all storms. Talk about forecasting or needing to be flexible. I had a lesson in that as I was literally cooped up in one room for over a day. My wife was out of town. We had a statewide driving ban that the governor imposed in Massachusetts. That satellite picture that I posted, I think, on the post right before this one is a real picture. It was crazy. So, whether it's trading or whether it's life, the need to recognize where you are, the need to recognize the flow that you're flowing in, the current that you're flowing in, and the need to determine what you're going to do about it. Are you going to fight it? Are you going to go with it? And if you're going to go with it, you might as well be anticipating it. And life may not have a crystal ball, but there are so many tea leaves out there that we can do a pretty good job of predicting what's going to happen over the next couple of days. You look back at this past blizzard Nemo, which they named just as a quick last example. And I find it amazing that they had this storm up in the Dakotas early, the other one down in Texas, and they said, well, all this modeling is going to do this, 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 and this, and on Friday, this is exactly where it's going to hit. You know, they could have been wrong. They could have missed it just by a couple hundred miles, but they didn't. And the ability to forecast something 4 or 5 days in advance in terms of basically identifying the track of two separate storms coming together, coming up central, southeastern Massachusetts, and predicting it's going to be a storm of all storms and a blizzard of all blizzards and up to 3 feet of snow, which is exactly what we got. I think that's incredible. But it shows you how accurate that forecasting is. Same thing in the markets. There's no doubt that it's the same thing in the markets. You have to use the modeling, use your experience, use your feel, if you will. And again, we talked a lot about field and jelly program, and anticipate what's going to happen. The people that say that it can't be done, they're lazy, basically. That's what it comes down to. Have I been lazy at times in my career? Absolutely. But if you're dedicated and focused and you work through exactly what's happening and you align with that and adjust for it and prepare for it, you're going to do fine. But as I've said before, you've got to do what people are not willing to do. You've got to believe in what other people are not willing to believe in. I'm very hopeful and I'm very optimistic that the book is going to go a long way in really finally exposing a number of myths, giving you 10-year history in detail, in the hopes, again, that it will shorten your learning curve. Yes, I've been very, very successful in this business and continue to be. I'm also richly blessed. It's also taken a very long time to reach this point. And to the extent that I can share that whole picture, which I'll be doing very, very soon, I think you'll be enjoying that. So that's a quick, not so quick recap. Again, Sunday, February 24th. Hope you all are doing very, very well. God bless you all. Stay warm in this winter, and I will promise to do another post a lot quicker than I did this one. Take care. Take care.